All right, so maybe Mark, let's wait a little bit before people kind of make their decision where they want to be. I don't know if we should start sort of advertising this session to keep as many people here or just keep it entirely up to them. But for those of you who are sort of undecided, believe me that this session will get really deep into the credit renewal automation. All the questions that you have for Rubik's should be answered in this session, and I've seen several of them. The questions about the hypothesis, what got tested, the level of risk, customization. We should have enough time to get to all of this. And of course, I assume that we will also have Peter accordion with us who can also talk a little more about their own experience.
Yes,
So,
I hope.
yes.
Be here.
Excellent. So I believe that we are also starting with the poll, if I'm not mistaken. So, we can do that, Daniel, right now. And so here's the thing: you will need to type a new code, which is CGAP 3. So if you are using Slido on your device and it's asking you for the code, you need to put a new code, CGAP 3, or you just scan the charge. It's the QR code, not the charge code, a QR code on the screen, and it brings you there. So the question we want to start with, just to get a sense of who are people here, is, did you implement some form of automated credit decisioning? Yes, no, unclear. It will give us a sense of, how much of experience you have with this specific implementation and how much we can kind of tap into your experience, because we want to make it a real breakout session with your participation and comments, not only us presenting in only Q&A version. So, okay, let's see. It seems like we have a really good crowd here with absolute majority having experience with the credit automation or possibly having experience with credit automation, which is great. So that should make for a nice discussion. But as it is often with elections, it's underrepresented of the overall participation. We have only 10% response rate. So it's even worse than the average election turnaround, I think, turnout. But let's not take too much time. So Daniel, do we have more questions for now, or should we just move on? Yeah, let's just move on.
Move on. Yeah, the other questions are for the end.
Correct. So Mark, why don't you kick it off? Over to you.
Sure. Well, great. Yeah. Thanks everyone for joining us. We have a backlog of questions in the chat, and I just want to check, Tomas, you're here, right?
Yeah, I am.
Okay. I'm going to invite you to, if you've seen some of those questions, I think I'm going to invite you to focus on what you think are the most important questions, or the questions that move us to the most important pieces. And along the way, I think we have a number of participants here who have done these implementations. And I think it would be very interesting to pose the question to the group, to have them compare their experience to ours. We CGAP did this with Rubik's, and so that involved a very certain time frame. It involved a certain approach. I think it'd be very interesting to hear from other people who did it differently, to see how they feel about how they compare their experience to ours. Does this sound? Can you do this, Tomas? Do you want to address some of the most important questions and comment on them?
Yeah, I'm looking at the chat right now. So some questions were about the fact that we have a generic skeleton with a level of customization. So yeah, what we do is that we have a methodological framework for the use of data for scoring purposes, right? And we have a clear approach on how we think data should be used. And the main focus is on behavioral analytics. And I think it's important to understand that, as it is quite different from the traditional scorecards where you basically put points on different criteria and characteristics of the clients. And you know, it can create pretty strong bias in the selection. And what our approach is really to focus not on customers' characteristics, but only on the behavior of clients. And so we have that framework. And then we, as I explained quickly before, we work with each institution to really understand their reality, their business challenges, how we want to segment the portfolio, and what is their risk appetite. And we also work together to define what is the best product and processes to implement that. And you see the very interesting presentation from Peter. That's the result of several work sessions together on how we can, you know, best build the best process that suits their reality and the tools they have and the digital channels they have, as well as the technology we provide. So yeah, we have that technology, we have that methodology, and we have that experience to then build the right product and process for each institution. Just looking to other questions. Yeah, I had a couple of questions on either what, you know, the kind of data we were using, did we, and about first-time customers. So that the automated renewal is about, of course, is about renewing loads. So we are focusing on existing customers. We are not scoring new customers, because, you know, on new customers, then you have the challenge of, you know, what kind of data is available. So we focus on first-time customers. And someone told me, well, this is where we have a lot of default first, you know, new customers. And the answer is quite simple. You know, we don't really consider the cycle, we just consider the way people behave. And as soon as a customer starts paying with delays, and, you know, we see a trend of a degradation of the behavior, then, you know, the score will downgrade the customer, it won't be eligible anymore. So there is a strong time dynamic in the scoring, because we get daily update of the data from the institution, and we run the scoring again every night once we get the update, the data update. So we really, and so we update the loan offers every day, we update the list of eligibles every day. So we have a really strong time dynamic to follow the last business events, basically. Yeah, so these were a couple of questions I had. I don't know, Mark, if you want to move forward with the discussion.
Great place to start.
Yeah.
I'm going to put this question out there. You have seen the Rubix's, basically, let's call it a 16-week build out period from start to that was your model sort of time frame roadmap. You also heard Peter talk about the fact that Axion was pretty close to doing that there was in all 5 pilots. In fact, there was, you know, the companies started working with Rubix. They built out this, when I say built out their prototype product, is they were able to upload their data and validate their data inside the Rubix platform, and then build their products and launch them. So I would love to hear from anyone else here in the chat. I'm sorry, here in the session, who did this differently. How does the 16-week process compare to what you do? Does it seem fast? Is it faster than you did it? Is it slower? Because we're interpreting this as success. So be very interested to compare it to particularly anybody who built their own in-house system. Do we have anyone there that wants to share? And Ivo, help me out here. Do we want people to raise their hand? How do we want to do this if we
It would be easiest if people just raise their hand. And of course, Peter, you feel free also to kind of come in and comment on these questions, because you've lived through it, through the implementation. You're living through it actually right now. So feel free to also get in. And yes, let's ask others to also raise their hand, which is, I don't know what's your layout, but typically on the bottom of your screen, there's a reactions icon where you can see raise hand options. So that's the easiest way to do it. So I don't know, Peter, if you wanted to comment.
Okay, Ivo, thank you. I was responding to some questions in the chat, but maybe I should start by sharing some of the changes we are proposing to make. So our current implementation, customers have to apply for the USSD channel. But we are thinking it may be faster if we just have only a single point of reducing the steps in the process flow. So when the customers get the offer, instead of compelling them to apply via the USSD channel, we can say your loan, this is an offer. Once you indicate, visit the branch to get the loan. So in that way, though, from the data we have a very minute number of failing points at the point of application, but we want to further eradicate any failing points. The important thing is customer wants credit. It's not how they are served that is important. They want they want access to credit. So customer is not really, yes, convenience is good. They can do from their home. That would be brilliant. It's also something we're looking at doing. How do we even give them the credit without even coming to the branch? How do we have a contactless process? But it's part of what we're already reviewing.
Yeah, thanks, Peter. I'm not convinced I can see all the reactions. So, Ivo, do you know if there are hands raised?
There are no
So far,
hands
no.
raised right now. Yeah.
Okay. I'm going to put a couple of questions out there because I think this goes to some of our biggest findings, and I think these are the interesting things to comment on and compare experience. So one I mentioned, the fact that by using a software as service provider, it enables a rapid deployment, and that we feel that this rapid deployment is really key to success because it keeps the institution focused on product development as opposed to struggling with the technology, and just generates learnings faster to keep things moving. So that's one big piece. The second big finding that I mentioned in the earlier session is that when we did the business case analysis, we really saw that to make a significant difference, to generate significant business value, it's going to be necessary to automate a significant portion of your renewals. And that is probably going to mean at least extending loan offers to category C clients, maybe even D clients. And obviously, you will want them to convert to B and A clients. And so this big question of facing this ultimate challenge in really exploiting this model, how would you go about? What do you think about this? how would you approach using a model like this to make offers to your C clients? What would you do to make this product more attractive to your clients, but also so that you incentivize them to improve their behavior? I think that is another one of the big findings. And finally, about increasing demand, the business case shows clearly that this whole thing only generates greater productivity and portfolio growth if the product is more attractive, much more attractive at the end of the day than your current product. And yes, the automated feature clearly creates an attractive aspect of the product in that it's faster, but love to hear your views on what are the other things you think you would need to do to make your product so much more attractive that it very significantly increases the number of people who are asking for renewals. I would say, in my mind, these were kind of the three big findings, and I certainly invite, Ivo and Tomas to throw others in. But love to hear your comments on these things. Any of these things that interest where you can share from your own experience. Is anyone here from Finca or Avance? We're singling you out because we know that you've done this.
And don't worry about raising hand. If you just unmute yourself and comment, that's fine.
Okay, Mark, I don't know if I can speak to
certainly
your question as regards the customers in the C class. Okay, so this is my thinking, and we're also evaluating it internally. It makes a lot of sense to serve these customers, give them a shorter way to access credit. However, we are then thinking of adding a little more step to the process. So recently we were evaluating a technology that will help us to improve on our collection. So for customers in C class, management may want to explore the option of giving them automatic credit, but before the disbursement is done, here in Nigeria, there is a unique bank verification number, BVN, that allows you to locate all the accounts a customer has got with all institutions, all financial institutions. So if the customer is able to and willing to sign a automatic debit, like a mandate, so the bank will use technology to do collection across any other accounts they have with other third-party institutions. Then, the only reason why you may want to have fear serving a customer automatically is if the customer defaults. But if you have other technology that allows you to sweep the funds from other accounts, then you may be able to reduce that risk. That's just my thinking. But we're already looking into that data, the customers in class C of Ruby score. We are comparing it with our internal scoring tool, which we were using before. And perhaps by the time we are done with our review, then we'll see what decision management we take. But it's possible to serve them.
Great.
I think it's interesting to have to think about that approach of hybrid solutions where you can build a process where you keep some human intervention when you are targeting a kind of riskier clients, where you say, well, if it's a client in class A or even B, then you can go full automated and just push the offer and do not even look at. And then if you start targeting class C or even class D, you can, you know, keep some verification lighter than the standard process, you know, that still leverages the score, make the whole thing faster for the client, but still, you know, make sure that you've made some kind of verification before disbursing. And yeah, we have that feature on the platform that we call opt-out, where basically anyone at the institution, of course, it's designed for loan officers, can exclude a customer from accessing the product, the automated renewal, being a class A, B, C, or D client, and even like before the client becomes eligible or after he had he became eligible. So, you know, we have these features, and I think in terms of process, it's having that hybrid approach is a good way to, you know, go to a bit riskier client and still making sure that we are controlling the risk.
Yeah, thanks, Thomas. I'm mindful of the time here, but I think I want to invite Thomas to share one more piece, and that is this comment about the productization of this. You have many clients, I say you, Rubik's has now many financial institution clients. And I am curious about some of your, I guess, greatest, best examples to share about the ways that financial institutions have improved the product, and not just using the score, but actually using the product, changing the product in a way that it increases customer demand and customer satisfaction. Can you comment on that?
Again, I think when we talk, because we are doing different projects, but when we talk about automated renewal, I think the transformation of the customer experience is very key, you know, in increasing the demand, increasing the customer satisfaction, and also pushing, as I said before, average customers to improve their behavior. And, you know, we have many clients where a standard renewal takes 2 weeks, you know, and you have maybe to go to the branch 2 or 3 times in the process. And we really transformed that into, you just come one and in an hour you have your money. So the transformation of the customer experience has, I think, the strongest impact on the attractivity of the product. And I think it's key in the success of the implementation to, so it's of course about the product, about transforming the customer experience, but it's also about, and we didn't talk much about that, but the change management is also, I'm sorry, I'm just going a bit on the side from your question, but I think it's also very important that an institution makes sure that, you know, all the staff, especially the staff in the branches, has the right understanding on the tool, on the way we are scoring clients. That's also very important, because at the end, the loan officers will be explaining, or the front staff in the branches will be explaining to the clients why they are eligible or not eligible, and how they can improve their behavior to become eligible. And it's very important to make sure that we are giving the right level of information to the staff. We are supporting them in the adoption of the product, so they can be in a position of giving the right information to the client. So, you know, I understand why I'm eligible. I understand what I have to do to remain eligible or to become eligible if I'm not. Yeah, and so it's, yeah, that's very key to make sure that the product becomes a success.
Christine, I see your hand up. Do you want to jump in?
Yes. Hi, everyone. Can you hear me well?
Yes.
Great. So thanks a lot for organizing all of this. First of all, I just wanted to add up on your question regarding Class C disbursements, because this is something that we're currently discussing right now when we're reviewing the performance from so Amrit in Cambodia. We've rolled out completely automated renewal end of August. So it's been over 10 months now, right? It's been enough time so we can see how it's evolving at country level. And so what we have noticed is that the percentage of automated renewals out of the total renewals still remains lower than what we're targeting. So from memory, in end of Q1, we were at 17%, which is not too bad, right? Because compared to where we were in September and even end of December, we still have an increase. Like 6 months ago, I think we were at about 12%. So we are shifting from 12% for 17%, but it's not at the targeted level that you were mentioning, Mark, earlier, in terms of, you know, getting the opportunity to have more new clients or having more existing clients for renewal loans, right? So we have a big questions currently on how do we make this process, right, more effective to increase both the productivity of the credit officers, but also in order to have more clients included in this scope. And so when we look at what is impacting currently the eligibility of our clients, it's really the C and D. So we have, as Thomas was mentioning, the ABCD score. And when we exclude the C and D clients, we're excluding 50% of our clients almost. So this question about what do we do and how do we do to include the client Cs is a huge question, and we have to look at it. So the ways that we're starting to look at it, and it's just we're at the beginning of it, right? Is first of all to see, or we change the parameters, right, for the clients B to include more client Cs, depends on our risk, you know, on our risk, how much we want to include clients who may repay a little bit less well, right? So there's this options. There's the option of categorizing our clients C differently as well, in order to outline within the client Cs the ones that are very good. And then there's a possibility to have different product features as well for the client Cs, with the maximum limit, which would be much lower to the one that we're having with the clients A and Bs, because what we're seeing with the clients A and B is that they are very good repayers, right? So from my perspective, but then we'll have to discuss internally within our team, right? We'll have to see, okay, given the experience and the feedback that we've had in the past months, and that we see that the portfolio at risk is 10 times lower through automated renewal than standard renewal. Can we now open it a little bit up for the good, very good C clients with the conditions I was talking about, right? But there was another question actually that I had for Thomas and for anybody who has experience, right, with this type of loans. And that's another challenge that we're facing now in Cambodia, is that with an increasing risk context, because the context in Cambodia is now that the portfolio at risk has been increasing for the past 4 months, especially. We face, apart from what we're discussing on the exclusion rules, etc., we face a huge issue in the regions where the onboarding was already difficult, linked to this portfolio at risk, where the trust in the behavioral score is completely dropping, you know, because even if we do see, even if data shows us, okay, automated renewals is clearly, has a clearly lower portfolio at risk than standard renewals, for those regions, it's very difficult to onboard them with a more complicated context. So things that we have in mind are, for example, we are pretty much putting this one aside, but for example, we had the question of, should we incentivize credit officers? For now, our point of view was rather, no, we don't want to do this, because they already have a gain with the productivity, time saving, etc. So yeah, I would be happy to have any feedback on this if you do have some related to trust with the increasing risk context.
Yeah, thank you, Christine. And, you know, all of these, anyone who shares from their own experience brings to it the particular challenges of their implementation, where they're at in their market. And so it's rich. It's rich to hear this. Cambodia is a very specific, brings a very specific set of circumstances to the table right now because of the high level of competition in the market and the general increase right now in late loans. Ivo, I'm going to ask you to guide us through this. We've reached the end of the time. I'm sure that there would be much to learn from Tomas in answering Christine's question and having Peter comment on it, but you let us know how best to wrap this up and use our remaining time.
Okay, so as a good referee in a good soccer or football game, I kind of feel like we can extend the match by, let's say, 4 or 5 minutes, because I would love to hear from Thomas and Peter quick reaction to the points that Christine is raising. So, and then we will wrap it up. So just very quickly, 1-2 sentences. I know it's a lot to ask, but Thomas and Peter, what are your thoughts?
Yeah, it's not an easy question. It depends a lot on the reality of the context in these regions. But I think maybe a simple answer would be to involve the staff in these regions into the thinking on, how we can build trust on the scoring. Why there is a lack of trust? Is there because bad customers are being eligible, and then we have to rework the scoring strategy, or is it something else? And so probably my approach would be to talk to these people to understand why they are not trusting the model, and based on that understanding, then see how we can, is it about the process where they need to have more hands on the process? Is it about the wrong people being eligible? So yeah, I think my approach would be to first understand, their view on that, and from there take the right decisions on what we can modify to rebuild that trust.
Peter, thank you, Thomas. Okay, so maybe let's just wrap it up. I think the question is much bigger than the time that remains anyways. So Daniel, if you can put on the feedback. First of all, thanks a lot for staying with us throughout the 3 hours. That really shows the interest and importance of the topic. And we do appreciate your time and contributions, either directly or throughout the chat. It's very important for us to get your feedback. So if you can, for the last time, go to slido.com, type CGAP 3, or scan the QR code and answer the questions that will help us to improve the work. There's a question that is just asking about what steps you're taking or planning to take, if any, based on this workshop experience. And I'll just give a few seconds, I guess, for you to answer. And then we have another question, which is more related to the feedback to this workshop. Before we completely conclude, I want to bring again the point that we are now writing the final report, where we would like to summarize not only the 5 principles that were mentioned initially, but also the insights, the learned lessons, the takeaways from the pilots, things that we've covered to the extent to which we could in those 3 hours in the workshop. We're writing them up in a sort of longer report and then short summary report. We're also going to release a documentary, a video that kind of monitors and captures the journey of the pilot MFIs, a few of them. So that is coming your way in the next couple of weeks. All of this will be eventually released on cgap.org/microfinance. You can already find the case studies there, and on our website you can find paper that speaks about the business intelligence. We've created a library of dashboards and provided very specific guidance on how to implement those customer behavior dashboards. We've created a tutorial video with our data analyst walking through the data analytical journey. So, keep sort of following the Microfinance microsite or collection page on cgap.org/microfinance, where you can find more resources as we release them. All right, maybe we go to the next question, and that one I will just keep open so you can provide your answers even after we conclude this webinar. But thank you very much. Thank you, Peter. Thank you, Thomas. Thank you, Mark, for moderating this breakout session. I think it was really great. And I wish everyone a good day.
Thank you, everyone.
Thanks, everyone.